This morning I'm delighted to be joined by Brian Wieser, who is a senior analyst within the financial sector for Publicis Groupe. So Brian, what brings you to Cannes?
Well, I like to come here to catch up with folks in the industry and some former colleagues, and frankly, just keep in touch with the industry.
So you're a financial analyst. You specialize within the media sector. Who are your clients?
So my clients are institutional investors. While I still remain very close to the industry, my only paying customers are institutional investors. Okay. That's my only interest in terms of who I do work for.
And what value do you provide to your clients?
Yeah. So institutional investors have many different processes by which they make decisions in terms of how they allocate capital. And many different investors have different strategies. Ultimately, sell-side analysts like myself, we hope to add value to that process in different ways.
Yeah.
And one of the ways is certainly I publish research that hopefully has some insight. I spend time with them on the phone. And occasionally make stock picks too.
Oh, okay.
Which, again, it's a bonus if they happen to be right. So, notwithstanding that Facebook is a fantastic company, having a sell on the IPO turned out to be a good call. There are other calls that don't work out so well. I think that the insights in the industry are probably the thing that I hopefully add the most value on.
And do you have a background in media?
So I was, long ago, I was actually involved heavily in college radio in the mid-90s. And I'd like to think that was my, I helped bring a college radio station onto the pre-web internet. To be clear, we couldn't broadcast because I couldn't find $5,000 for a server. But we did put a lot of aspects of the radio station on the web. And then I was a banker and an analyst covering the sectors. I then spent 8 years working inside of a unit of the Republic called Magna Global.
Yeah.
I was responsible for global forecasting of the advertising economy, among other things.
Yeah.
Spent the years as CMO for an ad tech company called Simul Media. And then I've been doing this for about 5 years. So, I've kind of bridged the financial community and the investment world for quite a while. Okay,
so what are the key factors that influence stock within the media sector?
Yeah, if we're looking, for example, at the agencies, there's actually only a couple of variables that really drive how the agency holding companies' stocks perform, and it's really around expectations of organic growth and margin trends. Occasionally there's some other disruption, like a major acquisition. Certainly WPP's gone through several, Publicis occasionally, and you haven't seen anything like that with Interpublic or Omnicom. But for the most part, on a day-to-day basis, it's that evolution of expectations on organic growth and margin trends.
How did last year's mediaPalooza affect the market? I mean, we've analysed that in previous Media Snacks, and in the most part, holding groups were kind of about net. The one big anomaly to that was Publicis Groupe that lost $2.5 billion worth of billings last year. Did that have a massive impact on their share price?
Yeah, I think Publicis definitely suffered more than most. I think depending on what your time horizon was, the agencies underperformed a little bit. I did downgrade them all around the time of the infamous speech at the ANA media conference last March of last year. But they underperformed a little bit, and Publicis really underperformed. But it was really more that their business did suffer. It was even less to do with the reviews, I'd argue, and more that although that was an issue, I feel like their organic growth really suffered. They're still suffering the consequences, if you will, from sort of a post-POG effects. And then, unfortunately, some, they've been distracted, and I think Maurice Levy's acknowledged as much. They've made some poor or overpriced acquisitions, for lack of a better word. Sapient, wonderful strategically for the most part, but again, it was a question of price. So I think that a lot of that played out, and the stock did underperform. I upgraded actually to a buy earlier this year, late last year, because I think investors actually probably went too negative on it.
I see.
So it's definitely been the one weaker one.
Did the restructuring of Publicis Groupe have a positive impact on your perspective of
I did. I do think, when I worked in the industry, as well as certainly as an analyst covering it, it's been a bit of an anomaly is not the right word, but It's too small numbers to be able to call it really an anomaly, but it's always appeared to me that Group M inside WPP had the, let's call it optimal strategy in terms of really centralizing. It is possible to buy media for less with less scale, but on average I suspect you will buy media cheaper if you're bigger, and at minimum, more importantly, the client perception is that you'll buy cheaper if you're bigger. So for Publicis to not have integrated SMG and ZO more was always interesting. You know, I recall thinking of it as very, well, you could look at it at least as more client-centric. That would be if I were to spin it.
Yeah, and that's the way that Morris Levy's spun it.
Yes, absolutely. On the other hand, when you talk to marketers, and they can all talk to the ends of the earth about how much they want their agency to be client-centric, but when you ask them how they make decisions, it comes down to price.
Yeah, that's right.
And again, it's not that you can't necessarily deliver great pricing and be incredibly client-centric. There's absolutely no shortage of scenarios. But hey, to take that to the extreme, why is there not more integrated creative and media? Because the best way to cut your media spend is to have great creative.
Okay.
So if you look at the market the way it is, not the way we wish it were, there's a certain inevitability to more centralization, both to lower operating costs, improve margins if you're Publicis, which is something they've committed to repeatedly, and I think they can deliver on. But to deliver lower pricing for the clients, I think that the positioning is better with the announcements that they made in December.
Okay, really, really interesting. So let's refer slightly back now to a couple of weeks ago with the report, the A&A report, the long-awaited A&A report that came out, and we were anticipating that there would be some stock market movements on the back of the findings. Yet, actually, we found that the stock within the media holding groups actually went up. Did that surprise you?
Yeah, in retrospect, no. To the extent that there was some pessimism baked in. There were some, again, investors are not particularly knowledgeable about the nuances of the industry.
You're right.
There were headlines that ran some trades around jail time or something to that effect. And again, I from my research on this topic, and recall, I've been diving into this for 2 years at least, predating the A&A event that led to this becoming so prominent. And I'd never come across anything that was obviously criminal. So to the extent, though, that there might have been some fears that this was going to be really bad, it was not that.
Yeah.
It was incrementally worse than we might have expected, but it wasn't a lot worse.
Right, okay.
And if you look at, as an investor, it's all about how events play out relative to expectations.
Yeah.
And if the marginal investor was thinking this was less bad than they feared, that's a positive.
Yes, I understand.
So the stocks, arguably, they weren't up a lot, but they were definitely not down. And arguably, and unfortunate for WPP, Brexit or Remain is arguably more important for them at this point.
Yeah, and in a lot of reports that we've read, there's the mention of this overhang, right, which is the cloud that sits over the market. Has that now been withdrawn? Yeah,
well, and that's where I think investors mostly have it wrong, and frankly, most of the analyst community I think has it wrong, because to say that, okay, just because the report didn't identify or explicitly call out fraud or criminal activity does not mean that this wasn't the biggest deal to hit the industry in I don't know how long. 5 years from now, the industry will look very different, and we'll be pointing back to this report as a catalyst for whatever shape it took. What shape that is hard to know, which, by the way, is why even a very sophisticated investor or analyst who understands the nuances is really hard-pressed to say who are the winners and losers. So, for example, it could very well be, just as an illustration, that you'll have more extreme poles of the industry. In other words, some agency groups will push harder on being non-transparent and being principled, so the WPP approach, let's say, but more explicit and more extreme and further. And then on the other, maybe the interpublic version. Now again, WPP has transparency in many places, and IPG has conflicts and principal activities in some places. But imagine if they push those extremes out further. maybe that becomes the shape of the industry, and the client chooses more actively. Which another possibility is maybe planning and buying increasingly become separated.
Yeah. That's right. There's a lot of discussion around that.
Right, and that could actually benefit an MDC. It could benefit an IPG.
Yeah.
There could be different winners and losers depending on what the prevailing outcomes are, and we don't really know. Clients, certainly the ones that I've spoken to, the marketers, almost all of them are thinking about what to do, and they don't know the answers. There's no clear, silver bullet here.
And do you see a positive outlook for the media sector from a financial perspective?
Well, when we're talking about the agencies, it's funny. Despite being critical, if you will, on many of these elements, I do consider myself to be, arguably one of the more positive about the industry in the long run, because I've seen firsthand how entrepreneurial the industry is. Now, again, that entrepreneurship can go the wrong way sometimes in terms of finding new ways to generate revenue if the client's not fully aware. But I mean entrepreneurial in a good way, in the sense that there are many different ways to find new solutions to help marketers solve problems.
Yeah.
And I think that agencies have so many people. I'm hard pressed to point to other kinds of companies who have so many people who are so capable of just setting up their own business if they needed to the next day.
Yeah.
I don't think you could go to any other subsector of the media industry, even Silicon Valley-based companies. I think the number of people who could go out and run their own companies is probably smaller than the agency world. And I think that ultimately that is what, even if the media agency business either grows slower than it has or is less profitable than it has been, they will find other parts of the agency marketing services businesses to expand in.
That's brilliant. On that note, I thank you very much for joining.
Thank you very much.